What's up, y'all? Will Linger here with VTI Consulting. Hey, today we're going to start talking about building an operations plan for your business. Uh, why operations plan and why now? Well, you've already done the hard work of building out a good chart of accounts and a good budget, and you have your team in place, your bookkeeper and your accountant. So, a lot of that financial information that is starting to become clear can be used for building out a better operations plan for your business. So, we're going to talk about a few things today, but since there's a lot of ground to cover, we're not going to do it all in this one video. I'm actually going to break this up into a few different portions. So, number one, first and foremost, please update your books. Make sure that that information is correct. Make sure your expenses are categorized. Make sure your invoices have been sent. Make sure that when you get payments on your invoices, that they've been settled and squared away. And please make sure that you update your budget, right? Because your budget is your planned amount, and your books, your QuickBooks, FreshBooks, whatever accounting software you're using, are your actuals. And so that's going to help you understand where you are in the quarter, where you are against the year. It's really going to be beneficial for you. So please, please, please make sure that before you start building an operations plan, as much as it depends on you and your bookkeeper, that your books and your budget are up to date. Because otherwise, you're going to be making decisions predicated on bad information. So you're probably going to end up in a bad spot. Number two, three key performance indicators that I really look at a lot when I'm running operations for a business is your burn rate, your customer acquisition costs, and your lifetime value. I've heard folks, Alex Ramosi, when he's speaking about business, essentially say that, hey, your enterprise value is the lifetime value of your customers minus the cost that you incurred to get them in the door to do business with you, divided by however many customers you have. So three very, very important key performance indicators. And then number three, and especially for the services-based businesses that are listening to this video, productizing your goods and services. This is huge. This is a big unlock for extending that lifetime value, which is essentially what we want to do, right? Because once customers do business with us, once we've got them in the door, it's a lot easier to extend or increase the amount of business that they do with us versus us go and find new folks to do business with us. So, okay, so let's jump over to our budget so we can start talking about our three big key performance indicators. So, burn rate, customer acquisition costs, and lifetime value. In this budget, you can see here in column I that we have set a sales target for ourselves of $700,000. Okay, that's a nominal amount of money. I mean, it's a big, large amount of money, but it's a nominal amount of money. It could be $100,000. It could be $1 million, right? It's whatever's right size for your business. So assume with me for a second in this exercise that we are going to shoot for a target, and we will accomplish a target of $700,000 in top line sales revenue for a calendar year. You'll also notice down below that my budget, for even as much as I preach, isn't finished being built out either, right? So how can we work around this if our budget hasn't been fully completed yet? Well, the second question that I would ask ourselves, or I'd ask you, is in addition to your sales goal, what is your profitability goal for the year? What percent do you want to keep when it's all said and done? I would recommend starting at 25% net profit margin. Obviously, the more the better, but 25% is a good, healthy amount, and it's very, very hard to go broke locking in a profit. So 25% as your first goal, which means that if I want to make 25% on $700,000, I can spend no more than $525,000 in a given year, right? That leaves me with 175 left over. That's my 25% net profit. So if I scroll down, seeing that this budget isn't fully baked out, it shows me a burn rate of $25.96 per day. We know that's way too low, right? Because that doesn't account for many hundreds of thousands of dollars that we would spend in a year in order to maintain that 25% net profit. So how can I hack and understand what number is actually my burn rate if I don't have my budget fully baked out yet? So take that $525,000, and divide it by however many working days there are for your business in a year. For most businesses that operate Monday through Friday, that total amount here in the US is 261 working days per year. So if I take that $525,000 divided by 261, I get essentially about $2,000, a little over $2,000, and that's my burn rate. Okay, that's what it costs my business to operate for a day, assuming that goal of 25% net profit, right? So why is this so important? Why is it Why is it important to know how much money I burn every single day? One, it's going to help you know how much money you need to make minimum every day. And two, it's going to help you understand, are my products and services priced correctly? That's where we're going to jump over to the pricing sheet.